Hmm. Here we go. Dum, dum. Quiet times. Hello. Good evening. What's going on? Hello. Ben. Hi, Ben. What's happening? Not much going on, eh? Sideways. Yeah, probably. Normally, if they're gonna dip, they'll typically sweep the range that they're in to the upside and then roll over and go down. There's a lot of just incomplete business right now, like what you see here. This is 3-month resistance that really does not want Sol to get strong, but at the same time, it's got like an obligation that if it can get back out of this hold level, then it can come up to a higher level, and that means pumpy times, and that can happen anywhere in the next 2 months and 22 days. So there's a bit of stuff going on. We did sort of we were sideways for probably almost 2 months, but ranges started to expand around the end of the year, and we started to get a few more decent moves just in the last week or so. So it hasn't been too bad. Like this is slow, but you can't help but wonder if it's just a bit of a calm before the storm. Let that liquidity build up. New York did take quite a bit. So when if you scroll back through and kind of have a look at this sort of behavior, where they come up and take all the shorts like that, start coming down. No one's really come in to fill that gap yet, so it's they've really got to look weak, and then you can move up. But it's not worth spending your own money to buy the price up if you can trigger people's stop losses to do it. So same same sort of thing here. Up, down, takes out some of the longs. This has got to build up. And if you really if you want to see it go higher than that sort of 138, then you've got to start getting stuff in this gap as well. If you don't get stuff up there, then maybe you do a sweep up to the 138 and a dump down. So this is trying to break up. There's a couple of possible ranges in here. So this candle here is the engulfment that came off the origin. So that should be the start of the range, and it got up to the pivot, rejected. So we're just waiting to see if it can get a close over this, and if it can, then it might be able to get some continuation, which would be in line with the trend break. Testing the break level up here, or there'd be it's kind of a prior broken origin there. So that was. This is why you got to be a little bit careful with when you're dealing with the fractal nature of charts. Is that if this was two candles, just two complete candles, this would be an origin level on the 15-minute time frame, and then you get a 15-minute close above it, and you think, oh sweet, we're off, we're off to the races, we're going to go up. But the thing is, it's three candles, so whatever is in here is a bigger time frame than this close. So not enough time spent, which means it comes back down and so on. Welcome to the wonderful, wonderful world of this level probably exists on more than one time frame. So, hello, how you doing? Yeah, Aussie guy just shilled my live stream in the Discord. I don't really have any plans on doing anything. I'm just sitting here sipping a drink. I have a very annoying house guest at the moment who is occupying the downstairs of my house, and I've decided that I'm going to occupy the upstairs because she is painful. I might have to delete that. She might even be a subscriber. It could be bad. 4 a.m. Oof. How long does it take to okay out then? Like, how long does it take to get out of that level? Well, you'd have to find out what that level actually is. So, what's that, a 15-minute chart? Let's have a look. Why can't all charts? Why can't everything just be a 1v1? Why can't there just be one time frame? We'd all be multi-Lambo owners. Okay, let's have a look. So that's the level there, or at least that's what we think the level is. Okay. Let's try some. Let's just try 30-minute. Well, there was a good guess. So you see two candles on a 30-minute and a blue candle above. So this is the native time frame for that particular origin, and yep. Did that touch? Yeah. So break level on the 30-minute, touched, rejected, failed to accumulate back to it, failed to hard close it, rejection. So like, if that's the kind of thing you got to watch for, because if you're ever wondering why you might get a hard close above what you think is actually a level, you got to know, like, is that actually the level, or is that the level on another time frame? And you would have had to have spent a little bit more time in accumulation and hard closed this candle to have actually broken that level. Hey, Charlie. Just put a limit order at 136.4 for retest of the close. Yeah, I'm a little bit surprised as to why that one day hasn't gone yet. I mean, it's a low probability one, so it's not exactly without risk, but thing you got to watch with ones like this is that if it closes up above this 136.335 tomorrow, it can flip that. Like, low probability holds often end up flipping and going up. So kind of like this one, where it closed over the top and then wicked up like that. So what you should probably do is look for some kind of refinement inside of there. So just start here and check out lower levels like that 4 hour as an example. So maybe look to get an entry on it up here rather than down here. And that's a very clean. It's a really clean 1 hour, so no wick touched, no body touched. And let's see, you got a really clean 15-minute up there. So, I mean, this kind of thing looks like it's set up to spike up and then reject off one of these higher levels. And you could probably take that down and go lower. 1, 2. So there's nothing decent in there. See, that looks like something, maybe. Yep. Yeah, you got a really clean 3-minute. Then, oopsie, not 1 hour. It's about the point where you want to start using the replay tool so you don't have to scroll back too far. Yep. And that was the origin rejection that started the entire daily break and downtrend and everything. So when you look at that on a daily, that's your trade from there to there. But if that liquidity builds up to the upside and they decide that they want to go take it, then it's more likely that it will do, something like that, or any of these levels up here. Just gotta watch it, see how it goes, and normally you'd put some kind of trend on it, which would be a bit tricky. We don't have a don't really have a decent place to start a trend there. So let's check this out too. Bigger picture, this is what Sol needs to do. Sol just needs to keep this 134 level for weekly close and then make a move up to the 144. So that's really what we want to see happen, bigger picture. Because based on that and that, bet you there's a break level or something that creates an origin over here. Something like this. Yeah. There you go. So you got all these wonderful origin levels over there. So origin level, full engulfment to create a range. Just got to stay above the base and then bounce the base. And if you look at that sort of arrow on the daily, this may be why they are just stuffing around at the moment, because if they close up here and then perform the daily short, then bouncing off the weekly after completing the daily short could take you up to 144. So it's all just timing. How long does it take for things to play out? Well, it's kind of about like I just said now, it's about timing. Like most of the smaller time frame stuff will play out quite quickly, but if it's close to the end of a day, then the position of the price during the lower time frame price action will have some kind of ramification at a higher time frame. So therefore, it may not play out so well at the end of a day. In the middle of a day, when it doesn't really matter, then it would normally play out relatively quickly. So, and then high time frame stuff can be fast, it can be slow. It's really just a case of liquidity. Sometimes the same moves get created over and over, like identical levels. It's just there's no point playing them out. And I think we had 23, 30 something. No, it was, can't remember now. It was a lot. There was like 30 different timeframes pointing at 123 for Sol, and it just took a long time because it just wasn't a massive amount of liquidity to form the path. So the price just kept going up, and people keep longing, and then eventually they go, "All right, we've got enough down there now," and off we go. So yeah, refining candles is voodoo. It's quite it's quite freaky. Normally, you need to find your trend and just see what your trend actually is. So we could take a guess. It's going to be here's something new. Pick a couple of candles going down. Okay, and then work the trend the other way. So you got its full close underneath it here, so we'll take it to that one. And then from that point, we look up. And we go, yeah, that closed below it, so we'll go here. That was touching it, so we go to the next one. That closed below it, we go there. There's our bounce. Tell me if that blows your mind. So you work out where your trend anchor is based on the reverse trends rather than whatever the trend is that was miles away over here somewhere. So yeah, you basically look for an available hold level and start working your trend down. Make at least one change. So that would be just forget this for a second. Let's go all the way back here and go. I want to take a scalp on a reverse trend. So your trend is there, and you could take that scalp if you really wanted to, but there isn't much of a target. You'd sort of be aiming at targeting the break level of that 2 candle range, because this yellow candle's already tested the hold level. So if it bounces off that trend, it's probably going to target that break. So there is a trade there. You could take that trade. And then this candle breaks the trend. So you go, there's no educational videos on this. The 12 people that are on here right now are the only ones that get to know this. All right, so then trend moves here. Now when trend moves here, we need to wait for it to come down here. And then if there's some kind of target up here, that'll be our target, but it doesn't exist yet. And let's find a target. So that could be a target. It's an origin. Okay, so that's going to be resistance if it hits this trend. So keep that in mind as a target. All right, we've got a hold level. That could be a target. So if it comes down here, hits this trend, we've got an origin and a hold level, both about the same number. Probably just be careful, take the wick. You got a break level just a little bit lower, so maybe target a bit lower. What else? Keeps going sideways. Oh, never gets to our trend. Look at that. No trade. Sucks to be us. Except, you know what we totally forgot? The trend moved. Go back here. All right, back here. Start again. So there to there. Next blue candle. There. Trend. Probably going to open on the wrong side of it. Yup. Rejection of trend. Got to keep moving it. There. There. Good work. Okay, this is the one we bounce. And target here. Any new target? No, hold level still the same. In, out, target. Yeah, there we go. Oh, I can't even get it right on replay tool. Too drunk. Can you reverse engineer the 3-wave thing right now? Probably. I'm trying to figure out right now how to weight ranges, which is doing my head in. If I showed you some of the data that I'm gathering, it's just nuts. So let's find it. Okay. What's this one? This is Sol. Okay, so this is welcome to the rabbit hole. The 1075 ranges available as of right now that are in play, and trying to figure out which one of those actually has priority over what other ones. And yeah, loads of fun. Mm. Yeah, I can usually deal with about 2 or 3 hours of that a day, and then after that, it's just too hard. But figured out some cool stuff. Nobody's jam. Yeah, nobody's jam. Everybody's marmalade. Yeah, the old 3 drop thing. I don't know. It sort of depends a wee bit on time frame, but normally you create ranges, and then you move through those ranges, and then if you want to move in one direction, you normally go the other way first, and then you bounce. So it's kind of like this. It's a pretty good visual example, actually, right there. I'll use this. Look at this amazing tool. Right, so you go, come long, got you, up we go. Right, so that's kind of what you would typically see in some kind of reversal, which is a wee bit different from the old W pattern, M pattern thing. Like, people talk about the M pattern normally means down, but it doesn't actually normally mean down. Normally what it means is that they've created something and then they may sweep it and then go up, because they want to build a position. So like if a really big player wants to build a position, they don't want to build it in here. They want people to start longing, create liquidity, and then they want to open their positions down here. And without that liquidity actually being down here, the problem is that when they go to open positions, it creates a severe move in the price and they end up with a really bad average entry. So like if you just came in right now with, I don't know, $500 million and went market order on Sol, problem is the price will do that. So if you can trigger 500 million worth of stop losses and then open your position, the price does that. And that's, so first you got to have the stop losses in the right places, which is the point of inducing that liquidity. Then you open your position, the price stays flat, and then you start to take it up. And there's no one to sell against you because you just liquidated them all. Bounce. So reverse trend for bounce and normally top down. Yeah, so so reverse trends actually have a better probability of bouncing or rejecting, whichever way you look at it. So like if it's a topside reverse trend, it has a better chance of rejecting, and a bottom side reverse trend has a better chance of bouncing. Because how do you actually close a candle under it? Like if you just think about that for a minute, how does the close of a candle ever get underneath a reverse trend? It's pretty hard, right? Because if it is a trend that's down sloping and it comes off the wick, right? So let's take any wick of a down sloping candle, like there to there. How can it actually close under if the trend is created off the wick? Because the line will always be lower than the lowest point of the candle. So even if they tried to have that with a completely flat body, the problem is it would not be under the wick. Oh, sorry, under the trend. Yeah, even if it had no wick. It's so your reverse trends are higher risk because if you think about how price follows trends, if you long to this, the next time it bounces off your trend, it's lower than your entry point. So there's always more risk in reverse trends. But if you just take them to whatever is the really obvious first target and don't try to be greedy and don't expect it to hold, then they work. They tend to work better. So you can find them on the top side as well. Like you just take something like this here, and then you just move it up. So that deviated above, probably would have got you pretty scared, but then went underneath, closed under, reject, down it comes. Now there'll be another one, which would be this one. So that's the reverse trend, there to there, after the hard close. Right, so this is kind of one of those differences between normal downtrend, goes up, and then full body break above, move trend, reverse trend, reject, TP at the hold level. Right, so that's just key thing in trading in general is don't be greedy. Right, that's just absolute key thing. But yeah, you could have taken that to there, down to there. What time frame are you on? Daily. Yeah, so there's 146 down to 133. I think most people will be pretty happy with that. And that's when you take a downtrend, move it up, still a downtrend, move it up, it's a reverse trend, reject the reverse trend, down to the hold. You probably take this one, downtrend, broken downtrend, moves to there, nothing. I mean, it's just rejecting the downtrend, but no reverse trend yet there. But you still got to move there. And this one probably needs to, well, needed to test the break level, which it did, which is this, sorry, that level. Needed to test the break level. Do I wait for a hard close before cutting your position? Sometimes, or sometimes I'd look at the lower time frame and just establish whether or not it has the ability to actually get out of the area. Because you can often look at it and just go, well, we've got 1 4-hour candle to go, and if that 4-hour candle is stuck under something and it takes 2 or 3 4-hour candles to get out of that area, then there's no way that daily is going to get out of that area in time. And so you might look to cut your position a bit earlier. The trick is always just to get the greediest entry possible, really. That's the key to survival, is don't be greedy when it comes to taking your profits, but be greedy when it comes to getting your entries. So, you know, if we looked at what the possible targets are for this trend rejection, well, first possible target is this untested break level, because it hadn't been, if we just get rid of this. Okay, so that's what it looked like when it hit the trend. This hard close means there's a retest, but this hard close means there's a support level. So you just look at it and you go, well, I'm just going to take a TP here. So that's 137 to 133. Now, a greedy person would go, but yes, there's another break level down here that's untested at 128. But what if? What if that one gets left behind? And what if I just go to my first support and my first support bounces the price? An even greedier person would go, well, there's probably a range level. Actually, no, there's no range level, but there's probably a hold level. Well, there is a hold level down here, right? So 124. So someone might take a trade off this trend and go, well, I don't want 133. I don't want 128. I want 124. But you don't get to make that choice. The chart's going to bounce here if it wants to, and it's going to go here if it wants to. And a lot of it is just based on whether there is just a huge amount of liquidity there, or if there's some up and coming close. Is there volume to get there quickly? Is there not? If I go there too quickly, can I get back? You know, like going all the way down here on a weekend, it's a bit weird, because like, who's going to open all the shorts? Like, you don't have a lot of volume on a weekend. So if you came down here, you're probably not going to be able to bounce back unless you actually buy the price up yourself. So it's kind of a bit of a weird thing to do that kind of dive. It's why you see a lot of the pump and dumps in the New York session when there's the most volume. There's the most amount of people on the market. If you take out a whole heap of longs or shorts, there's plenty of people there to replace them, and so you can move back the other way quite quickly. But you know, that's, you would look at that and you go, well, I'm just going to take a short on this trend, but I'm going to TP at the first level, and there you go, and you got your TP, and it went back to the trend and it closed under the trend, and maybe you take it again. Maybe you'd refine the level. So if a trend's had one rejection too, it's always a better idea to refine the level. So for example, here's your trend, here's your first rejection. And so what we might want to do is we might want to look at this new hold level and take it down and go, okay, what do we have in here? And not much in there. Just put this line on it there, so we know what's behind us, what's ahead of us. So there's nothing really there on the 4-hour. We're just looking for fractal copies of what we see on the daily. So there's nothing through there. Oh yeah, so we've got something here. a few somethings. So that ladder point, that ladder point, that one. Okay, so we can take this and just go, right, we'll look to there. There's an entry. And there was one slightly ahead of that, but let's see. No, not really, not really. Okay. And so after you've got that first rejection and that, first trade off the trend, and you haven't TP'd yet, but there you go, you TP'd. Then you look to enter on that, which is that refined level that just is up inside that daily. So you can see how that's got a perfect little touch. And then you go, well, where's my next daily resistance? But with this trade, you're also conscious that you want to see this daily candle closing under the hold. And if it doesn't close under the hold, you're just going to cut it. And it doesn't matter, and you'll be cutting it in profit because look at where you entered. So you entered on the refined part of the daily candle at 139.851. The price is sitting down here currently at 138.274. If it closes above 137.824 and you're risk averse, you just cut your trade. If it closes under it, then you'd look to, target down again. And what should it do? Closed above it, cut your trade, and then look at it wick up past your entry. So that's closed here, open the new candle above the level, cut your trade, in profit, wicks up past the entry. Now, yes, it did end up going down again, but you don't know that it was going to do that. It might have flipped that level. So you're in profit, just exit. Can you talk about range creation? How to pick which candle on trial and error? So the most cleanest form of range creation will be when you can see a really obvious origin, and then you can see an engulfment after it. So if we turn all that off, get rid of that. Shill. So what we want is okay. All right, so see this level here, this break level. When this candle closes up here, this will become an origin level, and you have an engulfment here. So this is capable of creating a range. All right, this particular candle, and so's. Let's see, what else do we have in here? Yeah, so was that one kind of, but we won't look at that one. I probably wouldn't have taken that one. So this is capable of creating a range. So let's go next. Right, so we did not get a hard close above the base. So for a range to progress, it needs to basically bounce between these various levels. And so the first thing I'd look at is I would look at something like, do these levels represent resistance? So I'd look over to the left and I'd go, well, does level 3 represent resistance? Yeah, there's a reverse hold there, because we rejected, went straight through that hold level. So there's some kind of resistance there. What's up here? Yep, break level, there's resistance there. So first you want an origin, you want a full engulfment. Full engulfment meaning it engulfs the body, it engulfs the wick. It's just like goodbye, volume, massive reversal. Okay, so that's what you see here, this candle. Then you go wick to wick for a range, not wick to body, and then have a bit of a look and go, well, do I have resistance on my upper levels? Because the upper levels should reject. They're the top of a range, right? So yeah, okay, I've got these, I've got a break level, I've got a reverse hold, so yeah, okay, I should reject. There's probably something off to the left, and you can tell that because of the combination of the way these wicks have been bouncing off something around this point. So if I went across to the left, I'd probably find some kind of level in amongst all of this from really far back, wherever it might be. Something's been bouncing here. And it may even be a different time frame, but no. Let's see. There's nothing really there. But if it's an origin, it can be lower. So definitely something bouncing there. Let's see. Could be that. Where are we? There? There? Yeah, could be that. Let's see. Yeah, there we go. Origin. Okay, so we know based on the 4-hour through to the daily, every one of these levels has some kind of support and resistance. And so that is capable of being a daily range. So the first thing you're kind of watching out for is to see, do we get a close over the level? Yes, we do. Did we reject? Yep. No hard close. Probably not moving up. Now, the annoying thing about ranges is they don't actually have to hard close. They can just pop. But trend resistance, a bunch of origin levels, probably wouldn't have just taken along on that one. Just wait, see if it comes back to the 133, and then maybe take it back to the 140, right? So just take that bracket that's in there. Okay, so there you go. So see it closes under and rejects off that level. And so if you just sort of visually look at the chart and just try to tell me what that rejected off. If it wasn't that line, what did it reject off? There's no hold here. That's not the trend. It's not these levels. I mean, it's continuation of rejection from these levels, but why did that wick stop there? Can you tell? If it wasn't for that one thing, could you tell? Pause, let everybody answer that question because there clearly is a delay. All 9 of you. I need 9 answers or I don't continue. Ooh. Should be drinking this out of a glass. Gassy. Rejecting trend? Well, the trend's higher up. No, there's nothing, is there? If I just took this off the chart, went goodbye, what's it rejecting? It's just rejecting thin air. Like this candle, no hold level. This candle didn't come back up to these levels. Yes, 100%. It's because James from Invest Answers said Sol was going up. Or Marty. Okay, so there's currently 8 people on this chat thing. 8 people now know that there is such a thing as a range level. And it's there to there. Should we have an emoji? Hey. Just seeing how long it takes for that video feed to catch up. Wait to see my emoji. It's quite delayed. Yeah, so okay, so this is one of the 1,000 odd ranges that's currently in play across every time frame on Sol. This is one of them. Okay, so the break level, of course, for this range is down here at 125.925. The levels for the range 140, 150, 161, 172, all with confluence for resistance. So all very valid. Like those prices, very valid. How do we get to them? Well, we've got to keep breaking trends and we've got to close over various levels. And because it's a 1-day time frame range, we've got to close over them with 1-day candles, right? So if this was a monthly equivalent, it would need monthly candles, but whatever, it's a 1-day range. So at some point we're going to get this 140 because we're going to bounce back up there, assuming it doesn't hit the break or doesn't. But even if it tries to hit the break, it's going to hit the origin, right? So the origin's going to bounce it anyway. So it's pretty safe to be averaging in to along around this price point because you've got an origin down here that's going to bounce it, and you've got the break level hasn't been hit, and you've got a range that's trying to push it up. The only annoying thing is the trend. So you'd probably, if you're taking longs in here, you'd just be taking profits if it hit the trend, and or whatever the first resistance is, which is basically just going to be the range level of the trend. Okay, so you just next candle. Okay, we've got a range trend. We're under the range level, and you can sort of see how you now get this little rejection here because you're back inside the hold level. So there's a couple of things that are going on now. You're both back inside the hold, so it can flip. So there's technically a level there as well. You're under the range level, and you've come at it from the wrong side of the trend. So this is the kind of thing that's going to keep price stuck for a bit, right? Or it's going to force it down. But you're still origin, range, break level not hit, price is still going to try and go up. And your trend is all the way over here, and you don't have a yellow candle yet, so you got no interior trend. So next. Okay, come down. Didn't quite tap the origin. Looking at that, just near miss. Did we get another trend? Yeah, got an interior like that. Okay. Scamwick. So this, whatever day that was, Monday the 8th of December, they started from under all the resistances, went for a good old scamwick all the way up to trend. So that would have been one of those days where everyone got really bullish and the price went up, and then they basically just like went, oh, whoops, we started from the wrong side, and down it comes again before the end of the day. So that's the kind of liquidity grab you get, where you just know that we've started down here, we're probably going to come up, or if we do come up through all this, it's probably not sustainable. So you hear me talk a lot on the videos about sustainable price moves. This is not sustainable. How the hell have you been up for 39 hours? Wow. I've been trying to apply. Yeah, so the wick to wick doesn't work off every engulfment. You've got to, first of all, find out, is there an origin? Did it engulf after that? And generally speaking, you want the engulfment to have engulfed the wick as well. It can do it in multi-continuous candles, but that's that's a whole nother video for another day. Yeah. So to get back up to this 140, got to get through this interior trend now. You got to get back above this hold level. You got to get back above this range level, and then maybe you can come up there. Boom. Off it goes. So another scammy wick, really, because it's still come from the wrong side of everything. People are probably getting quite bullish right now. So you just notice that it always just ends up basically on the wrong side of this range trend, and it hasn't hard closed over the 140 yet. So it's not leaving. And that is the opposite of these. That's because everyone got really bullish and they were above the downtrend. So now they sweep the liquidity to the downside and end up coming back up. So I may not have mentioned this very often, but if price ever dives through a trend to hit a horizontal level, it will almost always end up back above the trend, or at least at the trend. So, these kind of things where and the reverse as well. So if you start under this horizontal and you come through to hit a trend, you will probably always come back. Okay, if you start above a trend and you come down to hit a horizontal, and it went really deep, in this case it did go really deep, but it will almost always come back. So sometimes just with some of the swing positions I would do, I would just be looking at this level. I'd add at this level here, whatever that was, hold level. I'd be adding at the hold level, right? And then I would be adding a bit more as it comes down here, and then looking to TP back at the trend. I wouldn't necessarily look for it to go above the trend, because sometimes it stops just below and then rejects off the backside of the trend and then continues down. But that kind of thing where you go through a trend to a horizontal and then you nearly always come back up. So voila, trend moves, reject trend, go down. That's why you TP. And back under that level again. So now we're just making hold levels. That's a pretty low probability hold level. It's just, one candle, no range. And then you got your next one. This is also low probability. A little bit more of a hold level because it can create a range off that. But pretty low, still kind of low probability. Yeah, there you go. You would have got your short. Look where that went. So made it a few levels. So now this is the point where you've hit the break level for this range over here. And so now this range, the chances of this range actually coming back up here or getting back up to here is, decreased because you've now hit the break level. And it needs to sort of convert it to an origin level if it wants to continue. And that candle doesn't do it. Still doesn't do it. Okay. Where are we? That one can also create a range, but it hasn't closed over the base. So for this to create a range to the downside, it needs to close over that 1618 at 121. The same issue this one had over here when it was trying to create a range to the upside is it had to get some kind of hard close up in here, which it didn't do. So this is having the same issue and failing, but in the opposite direction. And it's probably completed this one. Yep. So we've hit the 4, tapped the 4. So this range fully played out, the whole thing. This one, not yet. Hasn't created. If it does create, the bottom of it's down here, 105. It's failing. Oh, it's got under. That's what to get to. Got to level. No, didn't quite get to level 2. Didn't hard close. So kind of a mirror of what you saw up here. These got above, but they didn't hard close. Couldn't continue. This has got below, but hasn't hard closed. Back up above. Creates a normal hold level, not a range level. Rejection off the base there again. And that's kind of where it's probably about, where is this? Oh, that's still December. Okay, crossing through the trend. Stuck under this annoying range trend. Still stuck under that annoying range trend. Range trends suck. Got over it. Let's bounce. Yes. Okay. Now we haven't hit the break level of this range unless we hit all the way up here. So the thing about ranges is sometimes the break levels are really high up and sometimes they're, higher up, like this one's higher up. So still got to get above this 133 really to break that range. Create another hold level to the downside. But we're also creating the first range trends. So you got to watch these kind of moves because there's actually sort of an independent trend through there, which could just hit this level and go up, or it could hit the hold level and go down. So it's quite a compressed trade. You'd have to be, you just wouldn't take that. Wouldn't take it as a long off the trend because the hold level is kind of too close. Wouldn't take it as a short because it's closing just up inside the wick and there is a trend here and it's going to open up probably on the top side of both of those. So, yep, what do you know? Up, up. See, it's holding that trend that's through there. We're sort of pumpkins. Yeah, we're up at like 136.53 on Sol. Yay! We got that 20 cents I was talking about earlier. Or was it 30? I think we were going for 30 cents. Okay. Let's see what comes next. We make a hold. We haven't engulfed the wick. Got a origin up here at about 128. We've got to close over 128 if we want to break out to the upside. That range is screwed, so get rid of that one. Is there anything else in there that's a range? Nope. Okay. And we bounce. And we really should have hit. What should we have hit? We should have hit the break level, which is there. We haven't hit the break level, so we should go up a little bit more. And then we should retest that. So let's see. Yay! We went up a little bit more. Hit the break level. Came down. Didn't do the retest though. Ooh. Okay, so this is where stuff starts to get a bit unsustainable because we've left this retest behind at this point. Moved that, bounced off the top side of the wick. Bounced off the top side of the trend. So this is the kind of stuff where you know that they want to go kind of parabolic. When they just shift trends and then they just use the trend to continue the move, it's like shift a trend, bounce a trend, shift a trend, bounce a trend. It's kind of parabolic price action. Yeah. Up over the break, through the range level, and no hard close over it. Let's see, what do we got? We got, yeah, that's the problem right there. That's our oldest origin level back here at the start of the range. So let's just hit that. So if it doesn't close over 433, it'll or 143.3, it'll probably go down. Yay. But we got our retest. So that's not a bad thing. This must be almost up to date now. Yeah. Okay. And here we are. So that's how price moves. Trends, origins, break levels, range trends, and just where it closes. So the things that you got to be, very conscious of is that down here you've got 128.65, 675, which is a level that hasn't had a retest. So there's a magnet pulling price to that. But you've got things like hard closed levels up here at 133, and you got range trends that are coming through here. And so there's a whole lot of reason that if it did do a dip back to that, if it was a fast dip during a volume period, it would just bounce, like straight off it and go back again, because it's coming from above things that are support pushing down. So then it bounces back the other way. So it's kind of where we are now. All right, what's going on in the chat? Yay, 8 likes. No, you're all quiet. I'll just drink. Everything's kind of quiet at the moment. Oh, 136.540. This probably looks cooler on a 15-minute chart, eh? Wait, look at that big candle. So there's our 15-minute range. Reject, 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 pump. So looking for it to hit that break level. Yeah, I'm still drinking vodka right now. I don't have a lot left. Damn, range trend, go away. You can sort of see the precision of how price moves and rejects though, can't you? It's up facing range trend. All that can do is reject off it. Doesn't have to reject very far though. So your first horizontal level of support is technically this 136. The other thing sometimes what you'll see is when there is no support, they'll simply make it. So they'll take a quick wick down and then bounce back and then create a gap and then create a new trend support, which could be something in here, something like that or whatever. So there's all sorts of different ways that they keep the price parabolic if they want to, but a wee bit unsustainable given that it's come from the wrong side of everything. Let's see what it does. And that was the 30-minute level, wasn't it? So let's have a look at the 30-minute and just see if that looks any different. Yeah, so to break that level, we need a 30-minute candle up here. Now, when price is just ranging, there's a lot of respect for them. And the thing is, when prices goes really parabolic, there's still respect for them. It's just they're on timeframes that you're probably not looking at or aware of. So we don't have many big timeframe closes until after the 12th, and then it gets really, really big. So I think let's see if I can bring up a thing with some stuff. Let's see. Custom sort. Days until close, smallest to longest. Here we go. So yeah, most of these closes are like 14 days. We've got a 28-day close today. That's getting a little bit bigger towards a month. 13 days, 7 days, 4 days, they're all quite small. And then we start to run into things that are like 100 days or more, around the 12th. And then a whole heap of things that are bigger than monthlies, around the 12th, and 400 days, 57, 66, all around the 12th. So you start looking at some of these bigger numbers, 200s on the 14th, 232s. So, we're just in a period where there just isn't much as far as timeframes go. But all the stuff you see here, like looking at a 30-minute chart, like bouncing off the origin because we went to it from the top side of the trend. So same thing we just said. We started above a trend, we hit a horizontal level, we bounce back up again. All of the stuff that you see right here happening on a 30-minute chart happens on a 100-day chart. It's just you've got to have a 100-day chart closing or close to closing, or and there's just not a lot of that big stuff right now. So yeah, Jip sucks. What's that Excel file? So the Excel file is a feed from a database that we're building for FibLab, which basically gets every single time frame that exists, and including the ones you just can't even chart, and it finds all of the structure inside of it and tracks how the price is moving through the various ranges relative to when the various candles close. So on any given day that if it closes in a certain range, where your support and your resistances are going to be based on the range that the price has recovered or lost. So it's then the fun part, which I'm trying to do at the moment, is figure out the weighting of the ranges. So whether a daily just plays out faster, has more precedence. How long does it take for a 100-day range to play out? That kind of stuff, which is just a absolute mindfuck. No other way to word that. Yeah, the last 2 months have been a bit tricky. So how everyone jokes like this time is different. This time is actually different. Last time we had, last bull run, we had one high time frame range, and we hit the top, and we rejected, and we moved on with life, and that was the end of it. This time we've got two. So we have one inside another. So which is not uncommon when you look at low time frame charts. Like you'll have a range and a range inside a range, and what you're typically looking for is you're looking for the evolution of the range either to the upside or the downside? Like, is it moving? If you take the first one, the biggest one, which is typical, you'll always have the biggest, like this one. Okay, you'll always have the biggest range prior to that of all of the others, because it's normally the one that hits the oldest support. So when the price is falling down, it hits something from the past, and the older the support, the more commitment there is to it. Because you imagine the people who left those orders sitting there for a year or 2 years, they are super committed, right? So if it hits really old support and builds a range, it's normally the stronger of the ranges, right? So based on age. And so if you look at this range here on the 30 minutes, and you look at the level that it struggled to get through right here, there you go, bang. Now it's the oldest range on a 30-minute versus looking at something on a 15-minute. So there's just an endless amount of ranges. But what you do tend to find is, like you see here, it's keeping the price down. Now, we've got 20 minutes and 58 seconds to go on this candle. So if we can get this candle above 136.550, and then in the next 30 minutes we can get a hard close over that range, well, then we could potentially look at pumping up to the next range level. So that's one range that could be looking to break out right now. So yeah, what's I think I've lost my train of thought. Ask the questions again. What's in that spreadsheet is basically everything you're seeing right here, right now, but on a 1 day plus scale, and for how price moves. I think that was my train of thought. Oh, hello. Just woke up. Good morning. So up? Yeah, I'm kind of sitting here in boredom waiting for 144 and 147 so I can yell bingo. There's an 8-second delay. Yeah. Thing about, say, a candle like this, which is quite annoying, is they haven't quite hit whatever this break level is here. And you got to count these candles, right? So 1, 2, 3, 4, 5, 6, and over here you got 1, 2, 3, 4. So whatever these are bigger time frames than 30-minute. So you sort of, even if you break out of this 30-minute trend, you're going to hit a break level that's probably something bigger. And so then you got to go and try and find it. So you got a genuine 1H in here, which you could hard close that in 48 minutes. Oh, I'm going to sneeze. There you go, everybody. Live sneeze. But that's something bigger again. I wonder what that is. Place your bets. No, it's not a 90. Not a 45, not a 1 hour. 2 hour. Hey, look at that, it's 2 hour. Okay, so we've also got a 2 hour range. Here's my other little thingy here. Okay, so a 2 hour break level. Might break a 2 hour trend. That's an hour and 47 minutes away. Never. Do we like these levels? Not really. Kind of nothing levels. So they don't really line up with stuff like that. But it's not. Yeah, don't know. Don't like those levels. What do we have back here? That was created off an origin. Don't really like those levels either. Nah. Southeast Asia. Oh yeah. Well, got a little 4-hour that closes at the same time as our 2-hour. See if they can sneak above 136.633. This is the one that's been keeping us pretty much stuck all day. As you can see, we've been kind of trapped under that level, which then gets supported by that level. So 8 hours stuck in that little space there. Seeing if we can break out of it, which we might do. Yep. Yeah. So that's the kind of thing that creates absolute boredom times. It's when you put a price between long and short ranges, or a long hold and a short range. Boredom. And then liquidity builds up, and then it'll go hunting after the liquidity. If it does it too soon, it comes from the wrong side, and then it can take it in reverse. And a sustainable manner would be to get up above the appropriate level and then open the next candle, which, given we're 1 hour and 43 minutes away, it's not easy to judge whether it'll be a sustainable move at this point or not. As we ask questions. Don't like this one, eh? 93.570. It would be good to spend a bit of time above that. It's a pretty big reverse level. Ouch. That took a hiding. Still in between. Annoying place to put BTC. Good night. Yeah, not much going to happen on that 4 hour for a while. $38 to flip yellow, get above there, break trend, maybe bounce. Hmm. 7 minutes. It's got to be yellow in 7 minutes. All the next one's got to be yellow. In 30 minutes after that 7 minutes. Do. What you're doing. 7 people. Or is it like one person and 6 bots? Yeah. Hey, got 2 real people. What's going on in Iran? I think they burnt some building down or something. Involved to the government, some kind of thing involving the government. Feel free to ask trading questions. Yeah, looks like could be another tease, another troll, not breaking out. I've got 5 people now. The bots must have left. Thing about these live streams is you don't really know what people actually want to know. Oh, down to 4 people. You were kind of running out of things to do, things to say. The charts are boring. There's not much going on, nothing exciting. I guess it's that thing about when everything's pumping, everyone's interested. But really, you should be looking for those moves before they pump. We'll just want the secret sauce. Well, there's lots of secret sauce. I started out mostly just trading refined hold levels on 100x leverage, which was probably the most degen way you could ever start in trading, but it works. Then all the other stuff you just start to notice over time. And contrary to what most multiplier models think, you can't just keep multiplying your portfolio the way that the Moon Boys would say you can, because you just can't get a fill. Like the issue becomes if you try to take a 100x scalp on a 1 hour chart with a 7-figure amount, you just will not get a fill. And so it just doesn't work. There's just a point where it just you have to start looking at bigger trades, bigger time frames, things like daily hold moves, there becomes a point where you actually just have to start building your position at a loss, or taking a partial entry at the greedy point and then adding a little bit more as it starts to bounce, and then add a little bit more when it gets back up over the hold entry. And your average is good, but you've just got to do it that way, because you'll never fill the position at the absolute greedy entry. If you actually hover over a candle and you actually look at trading volume on a candle, where can I see that? Yeah, I can't see that here. Sometimes you hover over these candles on your exchange and you have a look at the actual trading volume, and it might be $1 million or something like that. So imagine you're right at the very bottom trying to get a third decimal place entry with a 6 or 7 figure amount. It just doesn't fill. So the secret sauce is you start with these really awesome things like trading refined hold levels and getting 1 minute entries on high leverage. And then as the amount grows, you just have to start taking less trades on bigger time frames. And yep. And you have to stomach drawdown, because you might find that you'll never get a greedy perfect entry on something. So is it limited on characters? Type so much. Oh, next 30-minute candle. Yes. Trend moves, open above trend, need a hard close. So if I was ever scalping on stuff that's sub-daily, I would normally be looking at this over here, which just tells you when the various different fractal timeframes are closing within the day, because you might be on a 15-minute chart or something, and there could be a higher time frame closing at the same time, which over time you realize, like, just look at your clock. You can kind of see that you might have a 1 hour close, but you're staring at a 15-minute chart. But it's just nice to see the fractal countdowns, particularly some of the weird ones like 72 minutes. Look at all these time frames closing on the 12th. It's going to be something about that day. It's abnormal. So see what happens around the 12th. Oh, we've got 6 people now. Welcome, new person. What other secret sources there? I don't know. Everyone knows origin trades, I would think, by now. Everybody knows trends to hold, which is a pretty normal type of trade. Refining hold levels. Hopefully everyone knows refining hold levels. Time arrayed trends. I guess people know time arrayed trends. Latest rabbit hole I've been going down. Ooh. So I've been going down the rabbit hole of trying to wait, as in apply rules to ranges based on lots of things. so based on how they get created, what they get created off. So ranges get created off polarization. So you get like an origin level is one way you can create a range, but you can also create a range off a first trend touch, as long as there has been a gap in time between the creation of the trend and the touch of the trend. And likewise for range trends, same thing. So that's also been something I've been going down. So basically looking at polarization, what creates reversal ranges, and can you apply some kind of weight to them? Because out of all the ranges that we've got, like if you look at BTC, the bottom end of the price range is about 35K or something, and the top end of the price range is about 263K. So the magic would be figuring out which one wins, which one is in control, which one is now. And I've narrowed it down a wee bit. Like there's some particular ranges that have got like the one that's maybe going to go to 190.5 on Sol. There's 179 ranges that have been created through the same scenario, and 178 of them have played out in full, and the only one that hasn't is the one that goes to 190.5. So if it goes to 190.5, I will laugh a little bit about that because it's the only one that hasn't. Yeah, so I've been going down that rabbit hole. And yeah, it's about it. Trying to figure out weekly multipliers on exchanges because they move their daily anchors around, which is why sometimes moves play out before the trend breaks or before the candle closes, that kind of thing. So I figure if they do it on a daily, they probably do it on a weekly. So I've been trying to figure out the weekly. I think I figured that out today. So yeah, staying boring and staying busy with geeky stuff during quiet market times where you wait for your TPs to hit. Yeah, most of that stuff just doesn't really matter for day trading, leverage trading, or scalping. It's just kind of it's the same as being able to say, hey, the top at BTC is 126K. Yeah, you have to manually put it in. So the latest version of the tool that I'm using on TradingView creates the candles, and it works for the dailies. It's so it's finding the right anchor points, it's moving things, it's doing everything it needs to do. But I want to try and get the weeklies as well, which I've still got to figure out. So, like as an example, I downloaded a date range of candles from TradingView today, and I downloaded 2,377 candles on TradingView, and then I API exported them off the BitGet API, the exact same time range, and there was 2,470 or something. It was about 90 more in exactly the same time bracket as far as days, which means that they're closed candles and open new candles at different points throughout that time, even though they weren't real days. So it was just so it's that kind of stuff. Once you can find it, then you can figure out that that's the day they change the time, and any structure then created from that time forward is different. So yeah, it was out of 2,300. It was 2,377 on one, and it was about 90 more on the other. So yeah, you just rewind to the start, make sure 1 to 1, 1 to 2 to 2, 3 to 3, 4 to 4, etc. And then at some point, when it hits 1111, the other one goes to 1112, and that's your new point for where time changes. So it's, and I don't know why, but regardless of the why, it finds about 50% more trades. So why not? I don't know why this is going so slow. Should just come here. I managed to export a thing today that gave me all of the range levels above and below price for support and resistance. So that was quite interesting. And you could clearly see there were just these really big clusters where all these ranges that were created over different time frames, based on where the current candle opened, there was just these noticeable groups of price, even if they were shorts, because like a short that might be going down, if the short starts to fail, then the level above the short is actually still technically resistance for the short. So it's I was looking at that a wee bit today. Who's that? Mm. Oh, 136.6. Just hit an hour. Oh, we just hit a first touch 15-minute origin. What is that? Hmm. Oh, that one. Ooh, that's good. Happy. Oh, as long as they're up over your entry, that's good. Still 6%. Yeah, where are we? 30 minute. Yeah, so if it can keep like this for the next 17 minutes, it can hard close this level down here. And this one. Still got a reason to come back to these lower parts of that range, but still breaking the trend should head to the hold as long as it stays above the break. So somewhere between here and here. Oh, you got stopped out and now we're up 6%. Okay, yeah, that sucks. That sucks. Sorry, I thought you meant your stops were 6% in profit. What was the trade? Where did you enter? Let's have a look at it. Lit. Lit. What's lit? Lithium. Or this. Lighter. It's a new DEX. Okay. Well, let's add that. Oh, here we go. I like big chart. Slow, slow, slow. This is why you can't have 4 monitors with TradingView on them with at least this many tabs on each one. No, you can't see the tabs when you look at YouTube, can you? Can you see them if I scroll across them? No. That, yeah, okay. See what you mean. Bounce, sweep up. Okay, very new. I see. Let's see. Okay. The beautiful thing about new tokens is there's very, very little going on, like stuffle. And because of that, you don't have to really obsess too much about lots of ranges. All you do is you say, well, there's my first daily downtrend, and there's my first engulfment, and there's my break, and there I take along and I TP when I go into the hold here. And that's the beauty of new tokens. It's just not much to look at. The downside of new tokens is that the majority of the time there's going to be this shilling period where they run it up and then really go to hell afterwards. But so we want to find where that's going to bounce. So we've got a break level, we've got a break level. Neither one of them is an origin. So we can look at this. There. There. So not a bad daily close. Very subtle range that's coming off that. So that's your origin there. That's your range. Yeah, so if it closes over this on the daily, it may try to, so you'd want to be over that wick, you want to be over that level. Then you could target the hold, the break or the range level back up here. We have a trend in the way. No, it'll open up top of the trend if it opens above that level as well. So bounce could come on the next day rather than now. And that would sort of be the conservative move there. It may dip back through the trend and then, you know, come from a lower level, but that would be what I'd look at. And if we take it from there, see if we can find something sooner. Nope. Yep. Goes to there. Bummer. Yeah, so that was a trend dive. Started from the top side, came through the trend, went back up. So new trend on the hourly. Here. Whoops. And so if you were taking this on an hourly trade, you would have range there, there. So trend moves to here. You would have entered anywhere along here, added down below to fix your average, bring it below the trend just in case it doesn't recover, because you could just get out at profit if it closed and never recovered here. When it did hard close up here, you could add some more and TP up here. So where did you Sandy Toes? Where did you enter? Why? Where and why? What time frame and what level? Your charts are not too terrible, I hope. Oh, you know. The ones you put in the Discord group look fine. when you're dealing with like low time frame stuff, there's a lot of trends. A lot of stuff can be very subjective. When you're dealing with high time frames, it's a bit easier for every single person on the planet to have the same chart, but and all the levels and all the ranges, they they still apply. The hardest thing is figuring out how long they're still relevant for, and if you can figure it out, teach me. It's often hard to, sort of establish like, why did this candle stop here? Was there anything back in the past? Nope. So why did this lose trend and then stop here? I mean, we know it creates an origin here, so there could be a entry in the future if it ever comes down to there. But why did it stop there? Let's have a look. If that was our first and that was our second, could it simply be that? Broke there, went up, dived it, closed back above, continue to bounce off it the whole way down. That's the thing about trends. They're all over the place. Okay. There's a whole heap of stuff that I know, and there's a whole heap of stuff that I just don't know. And I see people putting things like, volume area high and volume area low on charts, and yeah, I don't get it. I don't know. I don't know why. I'm sure if I learned all about it, it would probably help in some way, but just never needed it. A chart that's kind of like as simple and basic as this, you'd sort of go, okay, well, there, 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 there. Failed to get over it, hard closed under it, rejected, short it. No. Have we tested the hold level? This candle had tested the hold level. So the break level is going to be the next target. Do we have any origins? No. Nothing under there. So it's just, one line. There. Moves to there. Moves to that one. Moves to that one. Tries to hold it. Hard closes. Short. I don't think I would have held it that long. Personally, I would have looked at something as boring as that as my TP. But when it hard closed underneath it, I would have shorted that again, but then I wouldn't have actually had any idea where it's going to go. You kind of have to wait for it to create an accumulation and create a trend, which is this candle here. And if you were dealing with that in real time and you saw your trade come all the way down here and then start bouncing back up here, and this before this candle closes, and it would have got all the way up here. So like the body of that candle at some point would have been all the way up here, and your entry would have been on this rejection of the break here, the hard close break. You'd just be closing your trade and taking your money, even though it ends up creating this wick and then rejecting again, and it takes several days to break it. And then it breaks it here. retest here. So now you sort of start going through your phases. So that's kind of like cycle 1, cycle 2, 3, 4, 5, long that, up it goes. That's your cycle trends. Very diplo. Do you mean diplomatic? I think the thing about TPs is there's a couple of things. One, if you've got them set as a limit TP, then you've got to be a bit wary of algos, because every single bot trading algo that exists can see the order book. So if you have a limit order set in the order book, it is visible. And so you can get a lot of front running on TPs if you set them as limit orders. If you set them as trigger market orders, it depends how much of a conspiracy theorist you are, because basically every single exchange that exists that you can think of has like a VIP9 account on Binance. And so it's like when they talk about how Binance is doing this and Binance is doing that, Binance does nothing. Every single big entity has an account on Binance. And it is very possible that, a smaller exchange who can see everything that you have on it, regardless of what type of order it is, they can trade against it. Right. So for most people, that's not really a thing to think about. But like if everybody is making the same decision because there's like 1,000 people on an exchange or 100,000 all choosing to do the same thing for the same reason, well, they do technically know every order that you've got, whether it's a market order, a trigger market order, or a limit order. And all of these exchanges do technically have accounts on other exchanges. So yeah, it can happen. There's a wee bit to the whole conspiracy theory stuff, but if you do trigger order exits, you're generally pretty safe. And if you just take the earliest resistance is pretty much the key. You want to get the greediest entry, and you just want the earliest resistance. And that's basically it. If you were to take a greedy entry on this, right? So like what you look for is you look for the cycle to play, which is this. Then you look for where is my greedy entry, and this is called an in-range origin. So this is where one of the candles within the range wicks the break level but continues up. So it's kind of a funky kind of origin. So you'd enter when it comes down to here. So you could enter here on the trend break, go down into a bit of drawdown and go up, or you could be greedy. You could wait for it to come down and find some kind of support after actually breaking through the cycle trends, which would be, 1, 2, 3, 4, 5. Look for something. It's this wick. That's the sign. This trend break confirms it. Enter around here. I don't know if it actually touched it, but didn't quite touch it. But you'd be, if you were looking for any kind of entry, you'd be looking to enter somewhere around there as the greedy area. And the rest of it's up. If you wanted to take a safety TP, it'd be there. First level. And then if you wanted another one, there. Second level. third, and so on. Hard thing sleeping too, because you know you can't adjust your stop loss while you're asleep. You can have a trailing stop loss. You can actually, on some exchanges, you can set a triggered trailing stop loss. So like you might have your first TP here, and you set a trailing stop loss to kick in once that TP is hit, so that you set it to be a certain percentage under your entry, so that you know that if it gets hit, it's break even, but then it follows the price up. But you can see how breaking this break level, which is this yellow candle right here on the 4 hour, see where it came back to retest the break level. So, one of the things I sort of preach is just take profits at break levels. So 2 or more candles. If you're dealing with a long, take profits at the top of any of the 2 or mores. Because general rule of thumb, if you take profits at a break level will get revisited at some point. You can always re-enter the trade if you think the range is going to continue to the upside. And so it's just and if it never continues, well, you've sold the top. That's kind of the gist of it. So that's a break level, but on the underside, so the bottom of 2. So take profit there. So if you had entered, say, even here, or waited to see if it came back to retest the trend and entered around the origin, or maybe you saw it kind of front run the origin a bit and just entered here, very similar entry, and then TP, 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 TP. If you didn't use a what the heck did I call that thing? Chasing stop loss. What do you call those things? Stop loss that follows the price. If you didn't use one of those, moving stop losses or whatever, you'd still be in the trade technically at the moment. But you would have taken enough profit along the way that it wouldn't really matter that it's back here. And so what happened with that trend, eh? It moved to there. And then it closed underneath it, and then it rejected. Down it goes. Trailing. Thank you. Yeah, I'm struggling. But you can see that trend from here to here to here. That trend line does absolutely nothing until this candle right here. And then it moves. Well, it actually kind of does something. You get a spike through it to the horizontal level. So much like we sort of said, you push through a trend, you hit a horizontal, you're very likely to come back down. So, based on where that trend was and based on where that horizontal level was, that was a very safe short to take the first time. And then trend moves to there. Guess what? You just go and do it again. This one's not. I would have been a little less comfortable with this one because it closed above the trend, but still ended up coming back down. Then I would have been more comfortable with this one. So it's got a hold and a trend, double confluence for rejection, And what's going to stop it? Not the hold level that was already tested by this, so it's going to be the break level there, or the origin there. And if those don't stop it, well, next. And if that doesn't stop it, it's going to complete the retest. And if that doesn't stop it, it's going to be the hold level. Ooh. Enjoy making tea. Right. Anything anyone want to look at? While Sol just keeps on trolling. Well, that's not bad. 1 hour hard close. Same thing really, it's just got to get back up above that level now. Same. Zek, hype, Zek. Okay, let's have a look at Zek. Oh, ouch. Yeah. So Zek is really old. Okay, as you can see, it's spent a really long time in accumulation. So the first thing about like we say about new tokens, the beauty of them is that there's stuff all timeframes in play. But when you look at things like Zek, you've got very big timeframes in play, like 3-month timeframes. And as you can see, we pushed through a 3-month break level. We have a 3-month, that's a break level. So we have a 3-month break level down there. We have another one there. So first thing is that makes it pretty hard to even touch this because we've got 2 months and 22 days to go on this candle, and we are right there. Okay, so don't know whether I'd want that. So let's see if we can find a trend. Of course, it's wrong way. So here's our top. 1, 2, 3, 4, 5. Geez, you didn't have much time to long that, did you? 1, 2, 3, 4, 5. Boom. Wow. Okay. There's no point going up there because there's no other yellow candle. So that means let's have a look at a month. Right. So we have 1 month, which is there. Okay, so we hard closed over that and there. Nah, nothing really there. Got a hold level that might form. Don't know if I'd use that. So let's see if we've got a weekly. Yes, we do. Can't go back in time though. Can't go to that. So we don't really have too much. Yeah. This thing just went up so fast, it's got very little to work with. So 3-month range, 1 month is down here. That's something else. Ugh. Weekly? Yeah, I'm not really trading ZEC because there's just not a lot to work with given that absolute explosion. No. No. Well, let's see if we can find a lower trend. I mean, these were your buys down here, which is great in hindsight. There's that. And that's not closed. So there's no candle there either. What about there? Let's try this one. There's no candle there, so get rid of that one. Okay, let's try 1 month from there. Nope. Let's try 1 week. Yeah, okay. Yeah. So that's a refined weekly level. Let's see where that goes. I hate this token already. Look at it, it's making me zoom in so much. Is that touching? I think that's touching. Yeah, that's touching. Dirty touch. Okay, so let's get rid of that. What's next? Of course, it's that one. Okay, so that goes to there, which then goes to there, which goes off the chart, touches that, bounces back. Okay, what do we got? There. You seriously just gave me the hardest one, eh? Is it above or below? It's below. Above, there, that's next. So you can take these, but that's a long time ago. Right, here, there. Just gotta find the right place for this trend to be. There. So you see every time I move this, you've got a trade. And no one was buying crypto back then because they didn't care. There, there, there. Now we're getting somewhere. Right. Covered, bounced, up, down. Okay, daily. Ooh, nasty. Oops. Yeah, so daily trend bounce to break level. So that was a trade. That was yesterday's trade. Break level's rejected. It's gone below trend. This candle can't break the trend. So we want to know that break level. We want to know that break level. We want to know that dirty origin in there. And we want to move our trend. Let's go 4 hour. Okay, 4 hour. Do we have a 4 hour level? Yep. This little filthy one. What else do we have? Slightly higher 4 hour origin. That's a natural 4 hour origin. See, when you hover the candle over it, look down the bottom of the chart, you can see it starts at 8. So 8 UTC, meaning that is actually a 4 hour time frame, capable of being a 4 hour time frame. So that's good because it's 2 candles. All right. Next trade. If it comes down here, that would be what I would look at. Now, depending on how greedy you want to be, if it closes back over this level, because it started above this level, it may do that or that. Generally better to wait for the trend to fight the horizontal. It may also do this. If it closes under the horizontal, it might attack the trend. Then, yeah, I'll move this. And then do that. Like so. Ugh. Yeah, 4 hour trade. The other thing I'd probably do is just put that 3 month, wherever it was, that 3 month level on there, because that's a cracker. Let's see where that sits. Yeah. So you got that 3 month break level down there as well. If it starts to close under things like that 3 month break level, then it's just scary times because that's pretty big. Although it needs to really be on a 3 month candle close underneath it. That's all in that same sort of area there. What else you got in there? Range trends. Yeah, that's Zach. It's probably the hardest token ever, but that's if you're looking for a short-term trade on it, that's probably the way to go. You've got origins, trends, 3-month break levels. There's a lot of reasons to stay above here. And next resistance really is just if it hard closes in this area, but it did come from above, so an opportunistic wick down to then bounce back up is kind of what you're looking for. So if you were to take that trade, where were we? We were not there. You can't come to there. We must have been there or there. No, we were there. So it's a pretty. Were we there? Or were we somewhere else? Oh, we weren't there. Not there. Were we there? No. It does look like it would probably take a run back up to retest some of these 400 levels. Yeah, when you get like a level like that, so you get like a level that's the same level as a 1 month and it's a 3 month. Sometimes what you'll end up with is you'll get the 1 month close and you'll get a bit of a move, and then you'll get a reversal and it goes the other way because it hasn't closed the higher time frame. It sort of depends on which month it is. Like if it is the same month that is the 3 month close, then it'll just be a hard close and boom, she's down. But if you've just created the level or just touched the level, and then the first month does it, and then you got 2 or 3 more months to go, or 2 months more to go, yeah, sometimes you just get a bit of a fake dump to the downside, and then it moves back up again. So it's a bit tricky. Some levels you can be below them for quite some time, and then end up just coming back up again because you don't realize that that was the timing of the next close, like like this, whatever that is, on the daily, some kind of break level that it got in below, and then it came back up and it recovered it, turned it into an origin. But there's 1, 2, 3, 4, 5, 6, 7, 8. There's like enough candles in there that that's something else. It's not just a daily. So you've been down below it for a day, getting back up above and going. And they've still got reason to go down there as well. Like that needs a retest. It's kind of why you should always try to chart top down if you can, because you'll notice the biggest things from the top. So that level there could be a multitude of different time frames, could have the same break level, but there's nothing bigger than a monthly. that'll be their break level. Oh, sorry, nothing bigger than a monthly, because it's 2 candles on a monthly. So, whereas we know that's a 3-month because you got 3 candles and they're not 2. I hope this thing doesn't just die on everybody that's been suckered into buying it. Hope it goes up. You know, hold levels. Let's say that's the trend and it has no work by the time it closes. Eek, up, dump. What was that other one? Zek. Or hype. Okay. Let's look hype. Hmm. I remember I remember someone saying to me about how hype was an amazing investment and it was going to go up. And I looked at the chart and I just said, it's got a 1 month, it was up about $50 at the time. It was up here somewhere. And I looked at this chart and I said, it's got a 1 month break level that hasn't retested. This is just set up to fail. I don't know what will cause it. I don't know when, but it will crash. And here we go. So, and we are now under it. So that's the difference between looking at, fundamentals, because by all rights, like, this is a platform that makes money, and if that has anything to do with the price of the token, it should go up. But regardless of whether it does or doesn't make money, it had a reverse level, it had a break level that had been hard closed, it had a lot of reasons to come down, and it has. Now it's looking like it might even break trend again. Let's see what's on the weekly. Kind of just holding. It's going to lose the daily. So there might be a trade in here. Yeah, that's not a very big bounce off a daily origin. Trend moves to the bottom. If it stays above the origin, it'll have an origin, it'll have a trend, it'll have a break level. Why is that not bounced? Let's see. Gonna cheat. Hey, there we go. Uh-huh. see. Okay. So it's dived the trend to hit the origin, it's coming back to the trend. So a close up over this is good for continuation to the upside, but a close under this is just shows that it just doesn't care and it's not really going up. So it might just reject. Yeah, so if you're not already in a trade on this, you probably wouldn't open one at this point. Raccoons. Yeah. So the tough thing about trades is like recognizing that candle, 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 creation of origin when it doesn't come back to it, then off it goes and it bounces off it again. And where do you take a trade? You take a trade on that level. What would you be deciding right now? So like action plan is you'd have an entry on this level. Maybe you would have had one there as well. So, you know, split between these. And the thought process is that in 12 hours this candle closes, and if it doesn't close back up above this trend, I just take my profit and I look for the next trade. And if it does close back up above that trend, then I'm probably going to bounce off the trend and come back up to this horizontal level, in which case I keep the trade open. And that's but if you enter here, the problem is you're really close to that trend. So you're making a decision at the same time that it is indecision. It hasn't got back over the trend and it hasn't really closed below it yet, and it's not going to hard close this one. So like it can come all the way back up, but you just don't know what it's going to do for another 12 hours and 24 minutes. Let's see how much time you would have had to have got those entries, eh? So let's just put a line here, and we'll put a line here. So we've got lines on both the origins, and it was after the open of this candle that it came down. And we'll get rid of all of that. And let's go down to a 15-minute chart. Okay. So you would have had a bit of time. What's that? 3:15 to 8:45 on a Saturday. It was down in here. So the idea really is that you have alerts on these key levels. And where was that trend? I don't know where that trend was. Wasn't there. We erased that from some other time frame, but the idea is that you have alerts on these key levels, and when they get hit, you have a look to see what's happening with the price. So if we were to go back to the 15-minute chart as an example, not the 72 minute, the 15 minute. So what you're doing is you're marking out things like your brake level there, and you'd also mark out this brake level, and you'd mark out your topside ones there. No other two candles. So what you'd be looking for is you're going to do any of these convert to origin levels, and this one does here. So that's the sign of a reversal. So you've entered a key level on the daily, and then you look at it from a 15-minute perspective and you go, well, am I starting to reverse? And there's a few signs in here. So first one being you hit the high time frame level, you fully engulf the wick of the candle. So that means you're looking to try and create a 15-minute range. And then price moves on and it does its thing. You actually got two up, one down, two up, two down. So you've got a couple of 15-minute ranges and then another one coming down. And then you start moving into sort of like 1, 1, 1, 1 type candles. So it's not really ranging, it's sort of more consolidating, it's building, but it's not actually creating a lot of ranges. Then you get another accumulation range, break level down here, and you're holding the origin levels in both cases. And then you do another full range engulfment, and then off it goes. So you sort of already knew that you were in a high time frame level. You're just looking for some form of low time frame reversal, and it's kind of happening in there. And then it's just a pity that candle's such a big candle. And you should probably be using trends as well, so you'd have something like that. Close to there. And so you start counting your trend breaks. So that's touching, so that's not one. So 1, 2, number 2, nothing else through there, 3, there's our candle. That one. Where were we? Okay, 3, 4, there, 5, long. Yeah, long the engulf. Boom, boom, boom. In at 24,500. Yeah, it's yeah, 24,500 is not a bad entry. Let's see. See? Bounce. Yeah, so if it closes this week down, so that's your trend. Reject, down, hold level. So if it closes with a hold level, but blue, then wherever this ends up, bottom of the wick, which is probably going to be there, but whatever. Then you could take it back up into that hold. If it closes blue but above the hold, then the trend bounce would probably go up higher, much higher. Yeah, so something we need to check that actually. What do you got there? You got range. Yeah. So as long as it doesn't create a hold to break the trend, it could sneak back above 26.460 and then up to 30. But it's also going to create its own independent range trend based on this configuration. So you're going to get that as well. So you want to sort of be up high enough that you can open over top of that. So, yeah, 24.8, 24.9 for weekly close at a minimum, if not over that 25.3. Yep. Catch you later. Right. Just started drinking is I'm gonna have to go to the bathroom. Still here setting up trays for the day. Yup. I'm kind of looking at this and just thinking whether we are basically going to be boring times until this thing actually cracks a new candle over that range. And then whether we get a bit of an explosive move from Sol. So that's kind of what I'm looking at. All of this is just the price going all the way up inside a really high time frame resistance, which is constantly weighing on my mind, knowing that we've got all sorts of reasons to basically go down right now. But the way the market works, it needs liquidity to go down. It needs people that it can liquidate to cascade the price down to where they want the price to be. And the best way to get people into the game is, from a long perspective, is to go up. So, we're here. Simply put, we came from the wrong side of resistance and we're heading towards some, this would be the most absolute bearish level, would be this 144.7. We could tap that wick and we could dump. And then we'd be entirely reliant on this 109 level actually catching us. S&P broke new highs. Yeah, crypto sucks. That's true. I struggle with non 24/7 product assets, whatever you want to call them, tokens, tradable things. So, this is the 3-month range that we really, really do not want to be under. But at some point in the future, we will close a 3-month candle below 133. It's going to happen one day. And when it does, this one, the 3-month candle being below 123 is going to want to go to $50. That's just bear market stuff. But the question is, how high up in here do we go before potentially coming back down again? And if you look historically at this, you had, you could have had the same doom and gloom back here, and you made a range candle. You had a break level, which wasn't an origin at that point. You had trend that wasn't broken, but the candle was below it. So you had all these things, and you could have been very bearish at that particular point in time. But really, this is not a decision. There's no decision here, right? This is the base of the range. If it goes below $50, well, that's the end of Sol, right? So if you started here, and then you had a normal hold level created here, just get rid of these lines. And so then you think, oh, okay, well, how high could it possibly go? So then you go, well, let's see what we've got. Do we have a monthly? Yeah, we do. It's up here. So we'll take monthly, we'll put it there. Do we have something smaller, maybe a weekly? No. Do we have a daily? Yep, we do. It's there. And just for a moment, look at that number, 253.275. Did not take long to find that. Really did not take long to find that. Let's go back to our 3-month trade that we know one day could play out. And it's got this greedy little entry up here at 253. And we reject the range level, start heading towards the origin. Every spot holder is really happy that we closed above the origin and above the range level. Got to keep clicking. How many times do I have to click this thing? Okay, so we closed up inside the hold candle. All right, let's go find a greedy entry. That was a 3-month candle. So he's already spent kind of 3 months going on here. Here's another 3 months. You get to your greedy entry. So now the question is, do we end up below this 133 on a 3-month close? Because if we do, we're just continuing this move, which started, back here, went here, and eventually wants to go here. So while we look for longs and look for shorts, all of this is going on a much bigger scale. They have after-hour trading now. What are you after-hour trading? The S&P. Whereabouts are you after-hour trading it? On a crypto exchange or like a real-world asset synthetic or something else? Ah, okay. Yeah, I've been really tempted to start scalping Tesla because it follows structure really, really well, and you can trade it pre and post hours as a synthetic on BitGet. So like I've been looking at this and thinking, oh well, why don't I there's just not a lot of candle history, which is probably one of the things that's kind of putting me off, but you can get a decent amount on the daily. And it just you get a couple of flat days like this for Saturdays and Sundays, which makes sense because the market's technically closed, and then you get trend breaks. But a lot of the stuff that happens on this seems to play out like this here as an example. This move to the upside, $6, actually happened entirely in pre-market, and then by the time the markets actually opened, the price had already completed the bounce to the upside and dumped. So it's just kind of means that obviously big players are getting in, they're doing their thing, and then they just open it up to everybody else and let you have your fun and games, but they're already done. So stuff like this, just getting these entries and exits, it just all seems to happen before market opens. So I've been thinking about just scalping it as a synthetic, because why not? I mean, I'm not a shareholder if I do it. I'm not interested really in that. Morning from Canada. Nice. We're already sort of bullish, I think, on the weekly for BTC. We're certainly already bullish on the monthly. Basically, everything on BTC is bullish until you get to about 3 month, I think. So is it 3 month? It sucks. No, 3 months still hasn't hit a break level. Might be 4 month. Just really plainly trending it. 3 month was kind of just on the fence. And we just want to see it get back above that hold, which it currently is not. But that's kind of like your 3 month. But it's holding the trend. So that's your 3 month trend through there. I think if you were to look at, say, a weekly event, so let's just say what would be positive signs on a weekly, it's really just holding this 90,550 and more so getting over the 93,128. So once you're up in here, then you're looking to create some kind of range to the upside. That would definitely be one. But if you zoom out and have a look at your trend structure, we've already kind of started. Like we broke. So this is an in range origin, which I haven't done an educational video on these, but just go 2 candles, one dips through the break of the first one before it even creates the range. So that's already an origin. So then you enter here at 85 and you're already in the trade. And then we get trend breaks this hold. So that's already very bullish. Like you've got the flipping of a hold level, and that's now becoming support rather than resistance. You've broken through this hold level, which makes sense because it was already tested here by this yellow candle, and now you're looking to close above that. So if we can keep this sort of price area, then we're above range levels. We've come off a origin, we're above trends, we've created potentially a new range as long as that can keep going up, and the relocation of our trend is here, so we're above that. All of this stuff is pretty textbook looking good for BTC on the weekly. Now, can it scam wick down and liquidate you if you jump into a high leverage long right at this moment? Of course it can, because that is a blue candle. The next one could be yellow, it could be higher, and then the retest of the prior broken trend could allow it to do a wick down and a bounce up. So anything like that can come about, and that's why it's a bit of a, trading is a slow game. Consistency. You're never going to get your Lambo off one trade, unless you're just really damn lucky. But yeah, so it looks pretty bullish in the scheme of reversals. There's also a 3-day, I think, reversal, which just about every single major move on BTC has come about off a 3-day, but they just I think they just kind of hid it from you, because 3-day structure changed about here last couple of days. So back here it was different, and I might have that somewhere. Three-day. Yeah, here we go. Because that's where I bought. Not that you can attach a trend line to it, but this is the kind of stuff you don't see. So if we look at that sort of level there, at about 84,683. So they built the range, tapped the range, went up, engulfed, created an origin by not revisiting it, entered on the origin. So I've been holding an entry from here on BTC, and we'll just see if it gets continuation, but that's the annoying stuff that they hide from you by changing where things start and finish. Yep. So the real number, like if you just want to know a number for BTC, it's about 74,000 and something is basically the do or die number. That's a break level which kind of encompasses every single piece of high time frame support that BTC has. And if it ends up underneath that for too long, it's toast. But yeah, as long as it doesn't go there, it's all good. No. I wish I knew. The people involved in them. So there's a website which, so the virtual private server and all that kind of stuff to build the website all got rented the other day, and there's just things like I don't want to release them if they're not absolutely perfect, or if I do release them, then I guess we just have to put a big disclaimer on there. There's things like the multi-day stuff, which is pretty much sorted, like absolutely figured out. There's the weekly stuff, which I'm still trying to figure out because it's hard to figure out exactly how they change weeklies. All the other tools, they work great. The dashboard thing, which is just absolutely awesome, is going to be able to refine all the hold levels, so you can literally just go, there is a shortened motion and these are the greedy levels for it. So you sort of, at any given time, you'd know that, hey, we're in a 3-month short. But so say if you'd had this dashboard before we dipped to 123, you would have known you were in a 3-month short, and you would have known that 253 was the greediest level inside that short, and that if you even remotely got close to that, you should just be getting the hell out, because it's just, you've come. It's sort of like pushing. I don't know how to describe it really. Like attaching a bungee cord to yourself and just running really hard out in one direction. Eventually, you run out of energy and it goes back. So it was just kind of at that level where there was nothing more. So it couldn't get any greedier, and it was already there. So yeah, so that kind of stuff. The whole database has been built. They're working on the live updating part of it at the moment, where it goes through and it just constantly updates and maintains itself. All of these indicators that I'm using, there's, well, not that you can see them there. Where are they? Here they are. All this stuff Not happy with this one, this advanced holds thing yet. Not really happy with that, so that might not get released. Single time frame trends, advanced time frame trends, break levels, range trends. This is all pretty good. Hold levels. This is all pretty good. The hold level one, you kind of want to use the dashboard because the dashboard will give you the refined levels and all that sort of stuff. And then there's just the education piece, because you got to spend quite a bit of time to make the education stuff, because it's one thing to say to someone, here's a hold level, open, a long, or a short. It's another thing to teach people how trends interact with hold levels, and that you shouldn't just open a long or a short on that level. Like, there's things you should be watching about it. So it sort of gives you where the trades are going to be, but you've still got to actually make sure that you're doing all the checks and balances that someone like me would be doing. And that that means recording more educational content. So yeah, I don't. But the alerts are cool. Being able to just come in and set alerts on creation of origin levels is pretty stunning. You just set that up on 10 different tokens, and when you get a daily origin level, you know there's a trade coming up. And if you have a hold level alert set and you have an origin level alert set, basically you just look for an origin level gets created, and then you got two options, right? It's either going to come back to the origin level and you're going to get a trade, or it's going to create a hold level after it creates the origin level, in which case you're going to have a range. So one way or another, you're going to have a trade. So you just have two alerts set up, and if you get one then the other, you got a trade. If you get one then an entry, you got a trade. It's pretty lazy stuff, actually, in the scheme of things. And then Blue's been painfully going through every token that's commonly traded, and he's been working out all the exact PNR settings for basically releasing a proper PNR indicator, which thus far works really well. So false signals out the door, and just it says you should be buying, you should be selling, that kind of thing. And then the other one, which is we've kind of run into a bit of a hiccup. We want it to be perfect, but it's really hard with what TradingView offers as far as PineScript goes. But we have an actual working trend indicator that actually can predict the trend before the trend changes, using the combination of origins and holds and how they form through time. So like earlier today when I was going through and I said, here's the 3-minute level that started this whole thing, and that was the 3-minute level at the top of a 3-month move. So you can find those, but you can also track those. But the problem is that TradingView doesn't allow for enough. They call them securities requests, where you look outside of the time frame that you're actually watching, and it finds candle data from other time frames. And the issue is it just doesn't allow for enough. So so that's kind of stuck at the moment with probably going to end up as some kind of offboard thing, because the database that has all the candles and everything inside of it will be eventually, all the data's there to do it. It's just got to make a system that can do it. So there's heaps actually going on. Like, we sit there and send cat memes, but there's a lot going on. So, but yeah, these basic tools, they're pretty much ready. I don't know how everyone's going to find this one. I actually personally find it easier just to manually do time arrayed trends than this, but you can set different anchor points on different time frames, and then it controls the trend afterwards. But personally, I find time arrayed trends are easy enough. Once you get the hang of it, they're just easy enough. You start with a weekly and then work your way down, or start with a monthly, work your way down. Start with wherever you can make a trend and then work your way down. So yeah, don't know. Doesn't really answer your question. Short version, I don't know. I don't know when they come out, but hopefully it's soon. At least some of them. Because at the moment, one of the big problems is you got this thing up here, right, which is called sharing in TradingView. And if I was to share a chart, the issue is you can't see any of this because you don't have the same things. So that's the other side of it, is chart sharing, which would be pretty awesome if everyone could just have the same things. I probably wouldn't have to do a daily update video anymore because you could all just see the same shit I look at. Just do it for giggles, right? Yeah. But yeah, and so that spreadsheet I had on earlier, a lot of so that data would be available. It's just trying to make it easy, for people, because it's tricky stuff looking through a lot of those ranges and trying to figure out where your top and bottom could be. And I thought one of the easiest things to take from it would be something like, what is today's first resistance based on range levels that we've closed in between? What is the what is the first support? And then maybe ladder them out so that you know that, hey, we've got a range of resistances and a range of supports between here and here. So I thought like that could be quite useful for people, because of course they change every close. And then I've gone down the rabbit hole of trying to figure out which ones are actually more important than others, which is loads of fun. Meanwhile, you can still just make a living by taking a trend and targeting the hold level, or taking a hold level and targeting the trend, or bouncing an origin level to the first support or resistance. Jeez, it won't let us out of here, will it? And the other rabbit hole that I really want to go down, but I just know that it's going to take probably the rest of my life and maybe more, is this, right? So we know this is a critical level for structural change and the move for Sol on this time frame. And the price, of course, closes just under it or just above it typically, because it's an important level. So we know a couple of things. We know that it's in a certain area where this is an important level, and we know how much time there is to go on the level. So therefore, you can actually kind of predict where price will be at any given time. And if you take that out and extrapolate that over, say, monthly areas or yearly areas or whatever, in theory, you can actually figure out where the price is going to be at a point in the future, just because there's so many ranges on different timeframes in operation at any given moment. So that's something I just want to get out of my brain. I don't even want to go down that rabbit hole because it would just be too time consuming, I think. How did I learn? So I started with Cotton Candy TA, which kind of opened my eyes to the fact that the thing that's moving the price around was very structured and controlled, and nothing to do with anything other than just some candles on a chart and a whole bunch of lines. And then so what he does is very much intraday trading, 100x scalping, that kind of stuff. So that's kind of where I started. And then I realized that everything is fractal, and where he sort of looks down in timeframes, you could look bigger, you could look much wider. And then that became a necessity as the portfolio grew, because you just can't take a really huge trade on a really low time frame. It just doesn't work. And then the more I sort of realized that everything is kind of just controlled, and algos, bots, etc., they all just make the same choice, and because of that, where price is at any given moment is basically like sending a message where they all just choose to do the same thing. And so then it's going to go up or it's going to go down. But there was more to it than just holds and trends. There were other things that were predictable. There was other things that just weren't really covered, and over time you just notice them, and then you start to test them. And then I got into a lot of data, so basically just recording all the data, back testing it, finding out what works, what doesn't, and yeah. And then there was also, I did a lot of investigation as time went on around things like smart money concepts, because some of the players in the market, they need other people to be in the market to even be able to open and close a position without creating ridiculous spreads. And so therefore, it's kind of a whole chicken and egg thing. It's like, is the structure created because of liquidity, or is it created to move to liquidity, or is it both? And effectively it's both, and that's where SMC comes in. Often the way that price moves is actually designed to induce people to actually take a trade. So it's the whole thing about, like, it pumps up, so people chase it. Why does it pump up? Because they want people to chase it. Why do people chase it? Well, because it's pumping. What's the benefit of that? Well, then when they all open their positions, then the bigger player can dump the price down into their stop losses, open their positions, their stop losses with minimal spread, and then take the price up again, which is what they want to do. So there's the whole kind of SMC factor, where what you see on the chart is almost designed to trick you into putting yourself in a position that benefits someone else. And then there's the price action structure, where things move in a certain way, and it all kind of works together. So, and pretty much everything you've ever seen, learned, or heard about trading is got confluence. People talk about things like cup and handle patterns, okay? And they talk about a cup and handle as being a really, really, really big breakout, right? So, not that this probably qualifies, but if you sort of imagine that you got this break level here, right, on the 15-minute chart, and there's 1, 2, 3. It's really, actually, let's look at a daily. It's really hard to do that with a 15-minute chart. Let's look at a daily. Okay. So let's find a period where the price was down for a really long time. Here. Okay, here. Down for a really long time. So let's look at a hard close of this break level. Okay, so in particular, what we want to look at is this candle here. Okay, and then we want to take this candle to this candle, and it's 643 days. Okay, so if you were to look on a chart at a 1-day engulfment, which we talk about in FibLab, we talk about trading, you've got one candle that goes above another. So there's one right here, right? This is one candle that engulfs another, and you can take a trade on that. Well, this entire area here, which gets broken here and then hard closed here, is, if you took 643 days divided by 2, it's just 2 candles. It's 2 really big candles. So everything is kind of fractal. And so the whole cup and handle thing is often just a really big time frame that you can't chart, you can't, well, you just wouldn't even think to look at it. And it's just a normal engulfment, but just really big, right? So that's kind of everything you look at. And so you look at wedges, You look at the different types of flags that people talk about. You look at ICT. You know, ICT talks about fair value gaps and that kind of thing. A fair value gap is a gap over a backside hold. So if you have a candle that like completely shoots up and goes really big, there'll be some kind of backside level. Like let's find one. Here's one. Okay. So ICT talks about things like, you know, fair value gaps and all that kind of thing. So it creates a fair value gap. You get an entry on the fair value gap and you get a rise, right? Well, it's just a backside level over here, which is something that, you know, got broken, got hard closed, got retested. It's just a break level. So everything kind of just comes down to holds, breaks, engulfments, trends, origins. That's it. Everything. You know, whether it's a triangle, whether it's shaped like a bat, like it really doesn't matter. It's just some kind of thing based on the basic fundamentals of how price chooses to move. So once you figure that out, you're no longer in mystery land. Right. Can you look at Sui? Yeah. So entry already up. Kind of want a day above here. Proper yellow hard close above that break level. Sorry, that's a weekly. You want a weekly candle up there. What do we got going on here? It's looking good. So may be recovering a prior lost trend as well, which is pretty bullish. See what that's up to. Touching the corner, down to there, down to there. Yeah, doesn't look that bad, eh? I mean, the only thing I'd say about this is just the wick's kind of long on the weekly there. So if it breaks with such a long wick, that moves there, and then that could reject off the trend and come back down. But it's because it hasn't technically opened and hard closed the break, it could do a complete fake on people and come all the way back down. But it looks good, looks good, looks good. So 1, 2, 3, 4. So it's getting towards that fifth stage. Should be looking to come back up, retest these levels. And at 1.37, I want to add to my trade. So 1.37 is a pretty good entry. I'd probably wait for it to hard close the break level and maybe enter if it retests it. But you might actually get the opportunity of something like this where it may come up here before it comes back down here. So you might be able to actually just take some profit up here and then re-enter down there. But it all kind of comes down to that wick. Coming from the underside of the break and having that long wick is actually kind of more of a fake out type close. So that's probably the only thing I'd be a little bit wary of. We go on the daily. Yeah, it's definitely going to come down one day. It's left a bunch of levels behind. Yeah, it's left a lot of stuff behind. So that's what it's working off now. Yeah, from a daily perspective, I just probably keep an eye on how that closes tomorrow. So it's sort of adhering to that trend, which doesn't technically exist here, but kind of does because of this candle. So it's may open over the top side. You want it to keep this engulfment. It's going to push up into that 1.8981 level and then maybe have a rejection down off that. But it's if it goes on an absolute rampage and pushes through this trend and hits these higher levels like 2.14, 2.11, 2.04, then you'd want to take some profits there and let it pull back down under trend. And yeah, it still hasn't hard closed anything down here, so lots of reasons for that to pull back. I don't know if it'll go lower than the weekly. You'd have, what do we got? We've got origin created daily range. It's been to that third level, hasn't hit the fourth. So, and it's kind of just playing around in there. And it's got another one in here. It's at the fourth. Another one in here, which is probably well and truly done. Yeah, so it may come. So this is another area where you quite often see retests, is that fourth level of any form of range. After it gets hard closed, it quite often comes down, hits that, bounces. Particularly when they have confluence with things like that, which is a break level, which has also been hard closed and untested, which is the top of the range. So there's Yeah, so I don't know if it'll go back down here, because it's got a bit of stuff going on there on the daily, but it could definitely come down into here. Uh-oh, I'm out of vodka. Yeah, it's much like everything else in the market right now. It's just doing everything from the wrong side of resistance. So it's yep. No, I treat in-range origins the same as any other type of origin, really. The main thing everyone should really learn is trends. They're the worst thing. Like, absolutely annoying. But worth learning. I think it's probably the biggest annoyance I ever see when I look on social media. Someone just like they go, "Here's a trend," big fat line straight through things, or they go highest wick to highest wick, and they wonder why they never get their short. And then of course you can, when you look at stuff like this, you realize that by taking it from one time frame down to another, that was a sweep of the liquidity on the weekly. So it's not really where you would start a weekly trend. Then you start it from somewhere lower down, and then you realize that's your weekly trend. And then you realize that that's your short, and you were in there. Whereas most people would start up here somewhere. That's not where your trend actually is. And of course it comes down, goes like that. Here's your next one. Woomph. Thing is, like, you look at this and you go, well, if I reject that trend, where do I go? And you had this level, and as crazy as it sounds, that's probably where I would have TP'd. I would have shorted here at 3.5 and TP'd at 3.1. Look at all that. But when you look back here, there wasn't really too much. There was another break level there, single, 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 double, origin, maybe that. Come back further, break, come back further, break, come back further, origin. These are all levels. It quite literally went to the absolute bottom of the range that created the whole move up in a single candle. I don't know who would have seen that coming. Yeah, you'd think. You'd think no one could predict it. In hindsight, it was something like an 11-week or a 13-week move. It was just this massive move. And so, like, you look at this on a 1-week scale and you've got all these levels, but if this was a 13-week scale, there just wouldn't be, I don't know if it was 13-week on this, but have a look. Nah, it wasn't 13-week on this. I think it was, is this, was it 13-week here? 11-week. Yeah. It was an 11-week. There you go. If you'd actually, and even I wasn't watching this kind of level, but there you go. There's your origin entry. And it's pretty precise. Can't even zoom in any further, but let's just take that to like 15-minute candles. Goes all the way up here somewhere. Right. I don't know if I can I zoom in? Yes. So the level is 253.428. If you look at the top of the screen up here, it got to 253.429. So that would be an 11-week entry to the third decimal place by 1. And the problem is, when you look at it from the time frame that it was actually functioning on, what was going to stop it? There's no hold levels, nothing. All there was this origin level down here at 120.487. So that was your move. Um, how much leverage do you use? I normally risk about 1 to 5% per trade. So it depends on the distance. So leverage is very much misunderstood. The distance between your stop loss and your entry, so your invalidation and your entry, will create some form of financial loss, right, if it gets hit. And you should be looking at a risk of, say, if you're really, really new to trading, maybe like 0.5% per trade. If you've been doing it a little bit, maybe 1%. If you've been doing it a long time, maybe more. And if you've been doing it a really long time, you'll take different trades at different risk monetary percentages of your overall portfolio. So then if you don't have enough money in your portfolio to create the loss that would happen based on invalidation, then you need leverage, right? So that's kind of the point of leverage. It's not about having a higher leverage or about what leverage you use. It's about maintaining the actual loss. So if you had a trade entry, say at $100, and your stop loss was at 90. So if you put $100 on that trade and it went from $100 to 90, you'd lose $10. So let's just say $10 was your acceptable loss. So what if you wanted to have a stop loss at 95 instead of 90? Well, then you could put twice as much on there if you were accepting a $10 loss, right? So, but then what if you didn't have twice as much in your portfolio? What if you only had $100 in your portfolio? So then you could take 2 times leverage because you're happy to accept a $10 loss if it moves between 100 and 95. So that's kind of the point of leverage. Leverage is about having the same amount of loss that you'd accept on any trade, but not having enough money in your portfolio to open a trade of that size based on the distance between your entry and your stop loss. So that's one means of leverage. The other reason you would use leverage, and you can't do this on every platform, but is because you're in a trade, you've been in a trade for a really long time, and you just want to free up the capital and you want to use it for other trades. So, you might have entered a long on Bitcoin at 2x, 3x, 5x, 1x, whatever, it doesn't matter. You might have entered it at, say, like 20k, and it's broken weekly levels or daily levels, weekly levels, monthly levels. The trend is on the increase, so you're going, okay, well, I have entered with a large amount of capital at a low leverage, but the price is so far away from my entry now. Maybe what I'll do is I'll release some of that capital so that I can use it for other things, and then you would increase your leverage, which frees up your capital, which would allow you to take other trades. So that's another reason you may play with leverage. And then you've got hedging, which would be another one. Because if you're on a low leverage trade and you see it's going to go the other way, you're going to need some capital if you actually want to hedge that trade that might be going the other way, because maybe you've got confidence that it's going to continue to go long, but the thing is there's going to be some retracement because you've just hit like a weekly hold level, so you know it's going to go back 20 bucks or whatever, or maybe it's going to drop 10% before it returns and goes higher. So you might go, okay, well, I'm going to take a short to hedge my long, keep my long open. Sometimes people do that for things like tax reasons because they don't want to realize profits and then have to reopen them again or whatever. But you may want to hedge your long. And to hedge your long, of course, you need capital. So then you might choose to increase the leverage on your long, frees up capital, which you can then use to open a short. So there's a few reasons why you'd use leverage of varying degrees, but I don't know. When I'm stuffing around, I'll take 100x trades just for giggles, sitting on the couch on low time frame charts. It is what it is. You just get in and out really fast, otherwise you'll lose, because you pretty much always lose if you're on high leverage and you keep it open too long. Most of my positions, if I was to open a really big position, like I say, I'm just looking at entry, stop loss, or invalidation, and then anywhere between 1 and 5% on the trade. That's about it. Yeah, and risk to reward. If I can get away with a 1-to-1, happy. 1-to-2, happy. 1-to-20, even better. You just sort of got to see how the trade develops, because you can't see really far ahead so much. Like even say a move like this, which is a really high time frame move. There would have been trends in here. Something like, oh, laggy. Come on, laggy. We're going on a short squeeze. Why is this so laggy? Okay. So we've had that. Okay. So you're rejecting off here. You didn't know that this was going to get through the trend. That's just not something that's possible to predict in advance. You know that that's going to reject. And you know that at the time of rejection, it's going to reject with no support under it. So while this candle's going down, there's nothing to really save it. But the fact that it closes down and moves the trend changes the trade. So at that point you go, well, is it going to keep going, or is it going to bounce off this trend? Because if it does bounce off this trend, there's likewise very little to stop it from going all the way back and round tripping you. So you sort of have to make a decision, like, do I just close my trade here, or do I keep coming down to here? So none of this would have even been a thing to think about for 11 weeks effectively, and then you have to make a choice. So yeah, often TPs can change, but looking at this now, like at this particular point in time, where is this trade going? Well, we're going to go back there. So we're going to head back to 165. Okay, so let's look at this. Interesting that sort of level is about where the complete air gap is in the high time frame liquidity, right? So it's pretty easy to push a price up to 165 if they want to, because you've got all that high time frame liquidity in there. Now, if we take all that high time frame liquidity and we get up to 165, we then run into that same trend. So we could reject off that and come back down, or we could close above there. Now, if we do close above there and we bounce off that trend, the next thing would be that break level at 209. So you can't see exactly how this candle is going to close in 2 months and 13 days, but you can kind of see the confluence between where the brackets of liquidity are, where the potential rejection is. And I say potential rejection because there's no blue hard closed candle under here. So we haven't actually lost this trend. We're just underneath it on a really high time frame. extremely... Oh, you newbie. You picked a really bad time to start. Market's been really boring. Are you in? I don't. Are you in the Discord? You should join the Discord. If you're not, it's just there's so much crap. Like when you start trading and you start looking around, there's just infinite amounts of crap out there that just leads people down the wrong path. So there used to be this really good website for explaining leverage better than I can, and then it disappeared. No, so I guess what I mean is like you've got all these different time frames that the chart works with, and if you think of like the biggest time frame that creates some kind of move requires a equal event on the other side of the chart to be a target or support. So like if you reject a monthly level, you're not going to stop when you hit a daily hold level. You might bounce on the daily hold level. There might be a little scalp or a little trade or a little reversal on the daily hold level, but it's going to go through the daily hold level eventually because it's come off some kind of monthly rejection. So most people are never going to look at things like an 11-week chart to see that there is an 11-week origin level at 253.428. And it's only if you know what creates a move that you actually know what can be the other side of it. So it's all time for time. So if you are in an 11-week move, you're going to find an 11-week support. And if you bounce off a 11-week support, you're probably going to find an 11-week resistance. And everything else in between is kind of just noise. It's just day trading. And that's what most people trade, is just the moves that are going on between the really big ones that no one ever looks at. So, but to the question of could someone have predicted this? Yeah, they probably could have if they'd been looking, but no one does. Like that's just stuff that's well above the time frames that the average person even bothers to pay attention to. And it would have been probably different on Sui. Don't know. We'll see if we can find Sui's dump. I look at that. I don't think it's that. So hasn't been around as long, so it's probably worth looking at a lower level. Here we go. Yeah, so with, is that it? Nope. So it was that one. So this has not been around as long as what Sol has. So just looking at the levels, this is a 3-week level. We created an origin up here when we didn't accumulate back based on that candle there. Now, single candle, single candle, single candle. So none of these are ranges. So it can't really stop there. This is the only range. And so other things that could have supported it would have been this level, but that was already retested here on that bounce. This level was hard closed, retested dive, so it wasn't that. So then there you go, origin. So different time frame because the token hasn't been around for as long, but yeah, the moment that little wick didn't touch that, game over. Probably equates to failure to hard close the middle of the range. So it had this range down here that it was trying to create, failed to hard close up in here, and created an origin reversal down to the origin. Yeah, that kind of thing. So you look at stuff like Aster, I think it was a 2-day. Okay. Maybe it's a 1-day. Yeah. So this was the day that CZ sent that tweet, right? It was this day. And everyone's like, CZ sends a tweet, price shoots up to the sky, blah, blah, blah. So break level, break level. This candle doesn't quite touch the break level across here on the daily. This touches it, it's an origin, first target straight up here. Second target straight up here. So if you'd never ever watched X, if you'd never paid any attention to social media or any of that crap, and you'd just been looking at this chart, all you would have seen is we create an origin level on this day, we enter along on this, and we target the break level because this candle's already tapped the hold, so the hold's kind of been tested. And so you long here to here. And then when it shoots up like that in a single candle and looks really huge and amazing, and everyone goes, well, you know, why did the price shoot up 22% and ended up going up 32%, but you probably wouldn't have taken a TP there. You would have at least TP'd here probably. But everyone goes, oh, it's because CZ sent some tweet out about AsterDex. But he hadn't sent the tweet this day when it created the level that was going to create the move. So, yeah. Charts are charts. And there's your range. So, nearly hit the top. Ended up wiping out every single person that chased it. Because, when this happened and everyone goes, oh, look, if CZ's in it, we'll be in it, it's going to be amazing. Comes all the way back down. Goes up, hits the top of the range, fails to hard close the range, down. Yeah, I long the reverse trend on Aster. 60 something, but just it's not quite going up the way I want it to be. This. Not that it's my call at the end of the day as to whether a token goes up or down, but along there. And yeah, it's just not quite moving back up the way it should. And then we created this on the monthly. So I kind of lucked out on this one because I ended up setting my TP slightly early. So I set my TP at like 8100 for my first TP, which was just pure luck because it didn't quite hit the level on the monthly. So not quite sure what this is up to because it may be coming back down here to the monthly trend, which would be a little bit below my entry, to then bounce back up to the hold. But yeah, sorry, the monthly trend's actually in here. So yeah, just kind of watching that. If I get stopped out, I get stopped out. I've still taken 30% on it, so it's fine. Yeah, probably, well, I guess it's not a bad time to start. It's a boring time to start, the way the market is, but yeah, best to learn. And it's probably actually better to learn in boring times than it is in euphoric times. Less noise. Yeah. When I get really bored, I'll look at social media narratives just for laughs, but no, not really. Everything is basically pre-written. When I first started, yeah, I looked at social media and you have all these influencers talking about this token, the next token, whatever. What I eventually realized is that by the time people are talking about it, it's too late. You know, you're just someone else's exit liquidity. It's hard to watch everything. It's almost impossible to watch everything, but you know, if you just were to look at basic things like origin reversal levels or range trends. So we come all the way down here. And at this particular point in time, absolutely no one would have been looking at Zcash, right? But you got levels and they bounce. And, you know, that's a 30% move. You wouldn't have taken that one, but yeah, 30%. This is the one that would really impress me because it did a bounce and then did a sweep. And so that's the typical sign that, guess what, it's time, you know, like they're just liquidating all the people that have been long in it, and that usually means you're going to get the bigger move, and then off it goes. So 128%, pulls back, up again. Meanwhile, like all these levels are getting created for the future, so there'd be something in here. Whoops. Yeah, that level. So you'd be watching that for the pullback. Watching that for your first target. So yeah, when did people start talking about Zcash? Probably when it was up here. So nah, not a big fan of social media. Not as a source of what's going to happen with a token. Do you want to see something? Look at the amount of layouts. Like a chart hoarder. Look at how different this has been from previous cycles. Hmm. There's a token called where's Sin token? Let's look at Sin token. Some shitcoin. Jesus, still going. How's that? Little pumper. Yeah. Yeah, I set alerts on this. I was testing the different indicators and all the tools. So I was like, oh yeah, look at it go. Hmm. Oh, someone else had that problem verifying capture. Let me see. Uh, can't see you there. If you try to join, keep it open. Just tell me what your username is. I'll see if I can just add you to the verified group. Oh, I think I can see you there. Is it Shubham? Gotcha. Okay. There you go. That should work now. Yeah, I know one other person who couldn't see the capture image. So it's not a big deal. We can tick a little box that makes you verified. Right. Well, what we got coming? New York. No, it's weekend. We got nothing. Some algos. Yeah, it looks pretty crappy. Hello. Yeah, we're just price stuck. Isn't this creepy? So this candle can create a range, this candle can create a range. So we put a fib on that candle, put a fib on this candle, and look how these levels just line up. You live in the matrix. Nah, we haven't really been doing much. Just kind of chilling. Price is doing nothing. Looked at a few tokens. That's about it, really. I ran out of drink. Just baking cake. What side of the world's waking up at the moment? US. Okay. Well, let's hope they all jump online and buy buy crypto. Nah. Just seems like it's waiting for something. Anything moving much? Do we think the top is in? Don't know. I'm actually a little undecided on that. Everyone's got their own opinion and their own reasons. But I can see a case for the top not being in. I just don't know exactly where it would go. I have a few ideas. So what is a bit different this time? Okay, so that was our monthly range. And we hit the top, yippee, reject. But we haven't lost the base. Okay, so this is the base, 75,944. And if you just looked at it without range levels, this would be a break level for what's a pretty high time frame because you've got 4 candles in here. So yeah, I don't know. We haven't lost it. We will probably figure it out in the next 20 days because it's either going to want to be up over this level, in which case it can start to move up, or it's not going to be over that level, in which case it's probably going to move down. But it's yeah, at this stage not lost. And looking into just some very basic TA. Oops, there. There's your trends. So we haven't lost the trend. And we haven't hit the break. So at this stage, it's kind of hard to say that, and we haven't lost the range. So haven't lost the range, haven't hit the break, haven't lost the trend. So from a monthly perspective, it's not actually that bad. Most of it is going to come down to, what's the wick like on the top of this candle? And whether it creates a hold level. Because you can imagine it opens, if it comes back up and opens above that range level, then the whole thing's just a hell of a fake out and it's going to go up. But that is kind of a complete monthly range. It's pulled back to the middle. So then what you do is you go, okay, well, let's look a bit higher and see, do we have anything bigger? And we do. And this is where it starts to get really funky. We've got an incomplete 2-month range. And we haven't lost the trend. And so one of the just really normal trades that you'd look at taking any given time is going to be up to this hold level off the trend. So that should get you back into 101, 108. If the trend breaks the hold level, then you've got, either another test of the highs or you've got a whole level that it hasn't actually gone to yet. So it's that's the 2-month. Okay, so that's the prior broken trend that got broken by this candle, retested here. So that's just normal. So if you were thinking that like this whole dump is because of a bear market, you could argue the same thing, that it's actually not at all because of a bear market, and it's just a retest of the prior broken trend, which was going to come about at some point. And then it went there, and then it went there. So, 130, 129, 132, somewhere in those 130s could just be a test of that topside trend, but don't know. Kind of got to get over this, that 93,570 level. What happens when the base If it loses this 83, it'll come down to that 70. And if it loses the 70, it goes to the bottom hold, which is about 62. And if it loses 62, it'll go to the reverse hold, which is about 60. And if it loses 60, well, you don't want it to lose 60. You'll have $30,000 Bitcoin. The full range for Bitcoin is about here to, this is if you take into account all time frames. It's about here to here. That's the full range for Bitcoin. So if you look at every single time frame that's available, levels 1 through 4, that's it. So, but it may be next cycle or the one after or whatever. By the time it gets there, could go. Yeah, whatever. Could do that. We're so retail. We get excited when it goes up $1. Yeah. Got to get above that. And this is kind of why part of me is still expecting us to have some kind of dump, because this candle, that's where the candle opened, and we haven't really come back here and bounced off that trend again. So sort of thinking, yeah, it might still, it's sitting there at about 86 now. So that 93,570 hold might push back here. Kind of see how they work. Welcome to wedges. Do you ever remove ranges? Yeah. I don't really want them all on my charts, but I have them all in a spreadsheet. Generally speaking, I would pay more attention to ranges if the break levels haven't been hit. If they have been hit and they become an origin level, then they're probably still valid, but if they've been hard closed and lost, it's hard to say whether those ranges are all that important anymore. Yeah, 88k would just be a weekly target. It would be pretty easy to get to that. Yeah, so it really only takes a close under that. Well, it could dive it if it wanted to, like just do a dive down into the hole, but a close under that 9550 would head down into that 88 area. Yep, just need a good weekly close. Do I think silver will hit 100? I don't know. Let's have a look at silver. Let's have a look. Wow. Like Zcash. The hell's that doing? Yeah, that really took off, didn't it? Um, hmm, wow. Maybe it might tap out when it hits that. Yeah. I'd probably start by just watching those levels. If it rejects from 93 somewhere in the next 3 to 4 months, if it was really cheeky and hard closed a yellow candle under this line here, which would be about 75, that'd be a hard close of this break level, but under resistance, so it could come back down there. But if it closes up in here, not that bad. Hell of a move. This is kind of, see the last time silver pumped? So you had that range in there. Went up above, came down, closed underneath, rejected off the trend, down it goes. So you're kind of looking for the same possible thing to happen off one of these two. Hmm. Interesting. Right. What else are we going to look at? I'm too sober. That's what I want to look at. Grass. Esther? Ooh. Okay. Esther. Yeah, so Esther, I'm sort of in two minds with this because we created this structure during the trade with monthly close. And it's not a lot of structure, but that would be below my entry. So I've taken profit up here at 8,100 and just kind of watching. If I get stopped out, whatever, done. But what it might be trying to do is create this, which would be both a support trend and a range trend, effectively. So if it does that, so really just seeing if the weekly closes below creates a hold level or not. If it doesn't create a hold level down here, then it's wanting to continue back up to here. But that being said, I'd still be a bit conscious of that 8170 just in case that decides to reject it. But yeah, it's done all the right things to come up to the hold level. So that trend break right there should be coming up here. Well, I think I might go to sleep. It's about 2 something in the morning, nearly 3. And there ain't much going on. Just a waiting game. Right. Yeah. Yeah, it's already tomorrow. Or today. I don't know how that works. Anyway, I think I'll go to sleep. Good night, everybody. Thanks for hanging around and doing nothing for the last 4 hours. 5 hours. Wow. Next time I will make sure I have more drink. We'll see you later on.